Hey everybody, it's Pete. Good morning. Welcome to a new episode of Stocks for Breakfast. And today we're going to talk about the top three reasons that traders struggle to get profitable and how to fix them. If you find these videos helpful, definitely click down and subscribe to the channel. I would really appreciate it. And if you have any comments about what we discuss in this video, definitely leave it below the video. I'll get back to you as soon as I can. So what we're going to discuss is last 3 or 4 days, especially the last 3 days, depending on when you watch this video. We had a very challenging tape. We had a challenging market. It wasn't as clear and as obvious as probably the prior 5 or 6 weeks to that. And some traders struggled. Some traders who were making reliable money, easy money, as a matter of fact, just couldn't turn the corner during those 3 days and were frustrated. So today what we're going to discuss is how to overcome the potholes that we all run into as traders and how to quickly get out of it. That's the big thing. It's not so much does it happen, it happens to everybody. But the question is, can you spot it? Can you stop it? And can you get to the other side? I think what's interesting and something that I want to bring up, because we're going to talk about professional trading in a second, is myself as somebody who's trading for 21 years now. I didn't have a tough time during those 3 days. And I'm not saying because I printed money. I'm not saying because I made a ton of money during those 3 days when everybody else is struggling. That would just be foolish to be like, oh, I did it, you didn't. However, because I recognized the conditions were tougher, because I recognized we weren't getting follow through, I dropped my share size dramatically. I pulled back my share activity, meaning my trade activity, dramatically. Because, and this is the key, like people think that you need like this superhuman discipline. I pulled it back because I recognize over the years that when I trade during those conditions, when the tape changes, or when I just simply don't understand what's going on, when I trade during those conditions, that's when I lose the most money. So when you start to get to the other side and you start to pay attention and you understand when you personally have a tough time making money, it's imperative that you stop. It's imperative that you pull back. So I didn't necessarily make a lot more money than anybody else last week, but I sure as heck didn't lose a lot because I recognized the conditions. It sounds like the same thing, but it's not. It's really saying to yourself, if I don't get paid because I take those kinds of trades, then I have no chance of getting paid. So you recognize it, you stop it, you slow down, and then when the conditions are easier, and again, easy in quotes because easy is relative to everybody, you're not digging yourself out of a hole. You just kind of like lost a little bit, which is okay. That's a part of what we do. And then when the market gets clear again, then you're back to net profitable. So you're not digging back out of trading because you shouldn't have. So we're going to get into a little bit of a PowerPoint here. And I hope that these are something that you can implement quickly. And when you see it happening, you'll be like, that's reason number 3. So we're going to talk about the top 3 reasons most profitable traders struggle. So we're going to go over to our fancy PowerPoint here. And most importantly, it's not so much the reasons, we want to be able to spot them, but it's more about the fixes of how to stop it. Okay. And we also want to talk about this. This is something that we mentioned in our bootcamp community on, I think this was either Thursday or Friday. I don't remember exactly which day it was. It was definitely one of those 3 days. I had noticed, of course, new traders just couldn't wait to get involved. New traders, new members of the community just couldn't wait to trade. But then I kind of threw this out there as kind of like a wake-up call. It's funny, we become traders, so we no longer trade hours for dollars. But then when the market opens or when the week starts, we feel a need to do something. Remember, we get paid by the month, not by the hour. And this is something that is so powerful to really understand, that we should be putting our money in harm's way because there's an edge, because we're accepting the risk in exchange for a likely profit and a profit that warrants taking the risk. So think about this, especially if you're a day trader. Screenshot that, print it out, that you're not trading between 9:30 and 4 and you have to do something. You don't have to do something. You have to trade when your edge is there and you're okay with accepting risk. So if you want, pause this, take a snapshot of it, because this is one of the most valuable lessons that I personally learned, and hopefully I can give that lesson to you today, and you really, really let it sink in, okay? So the first problem that we're talking about is you're not thinking like a pro, which means you feel anxious. So if you think about what I just said a couple of minutes ago about me personally not trading super actively those days, especially the Wednesday, Thursday, and Friday, which was reflected in the fact that I did not call out a lot of trades for the community, which I was trying to, and I did finally get across to them that if I'm not trading, I'm not seeing anything. And then we had deep discussions about what am I not seeing, which, by the way, that's a big part of trading, is when you get to the point where you can say, I don't see anything, that means you're really getting close to the other side, because now you're saying, I know what I'm looking for, and it's not there. So if you're feeling anxious, if you feel like you have to do something, think about that story that I just said, which is true. It's not a story that I did not trade that actively for 3 full days. And I've been trading for 21 years. I love to trade. I can't wait to get involved. But when you realize that trading when you shouldn't be is the reason you don't get paid, it's easy, really easy to be disciplined or pull yourself back. So what's the fix? Relax. Stop trading for the sake of trading. Stop judging your trades, trade by trade by trade. Let the edge do the work. Do not place any trades that don't match your edge, and especially don't trade just because the market opens, whether it's Monday for swing trades for the following week, whether it's 9:30 in the morning and you're day trading. We have a lot of members in the community who don't trade the first 15 minutes, the first half hour of the day, that are fully active day traders and doing well in the boot camp. And they're just okay with that. They're like, look, I'm going to let all this dust settle. I'm going to let all the nonsense get out of the way. And then I'm going to dip my toes in and start placing trades. You need to determine what time of day, what time of week, what circumstances match your personal criteria, and then just step back and only look for entries. See, a lot of people don't understand. So I'll come back to the screen really quick. The actual trading part is the easiest part of what we do. I know a lot of people who are newer, especially traders who are struggling, just can't really understand that. And it really comes down to this. If you have a process, if you have a structure for what you're looking at, and ours is order flow and reading the tape. Once you have that structure, then really when you're doing your game planning, when you're doing your scanning, your screening, you're just looking for opportunities that match that. And then when the market opens, you've already scripted what you're going to do during the day. Here's where I plan on buying. This is what my stop loss is going to be. This is my initial profit target. If it goes past that, I have trailing stop loss parameters. That's it. There's no stress anymore. You're literally just following the script that you made before the market even opened. That's what it means to start thinking like a pro. And ask yourself, if you're feeling anxious, if you feel like you have to do something all the time, it just means you haven't gone a little deeper. You haven't taken that next step to really get to the point where you're scripting out based on what your strategy looks like. So again, I get very excited when a new trader or even an experienced trader, member of the community, says, I don't see anything. And that is really exciting, not because there's nothing to see, but because they know what they're looking for. And that's super important. You want to get to that point. Okay, let's keep going. Okay, next, trading too many mediocre or even bad trades. Again, this kind of fits in with not having a strategy, but it's actually a little deeper than that. Again, most people think here, we want to think a little bit deeper. We want to go a little further into the subject, right? On the surface, it sounds like you don't have an edge, but that's not really the case. You'd be shocked if you actually paid super attention and went back and reviewed your trades, let's say Saturday after you wrote them all down during the week, and saw how many trades, even if you have a good strategy, how many trades you took that were not really good ideas. And this kind of fits back into problem number one, where you're trading because the market's open. But this is kind of a different level of that, where the market's open. Maybe you're not as anxious, but you feel like you need to make money. You feel like you want to be involved, right? I'm going to go over to a couple of charts, and we're going to really drill this home. Okay, avoid any trade that does not fit your A+ scenario. We had a couple of members of the community last week who kind of with us for maybe 30, 45 days, saying, what did I miss? What didn't I see? And it really comes down to, did you actually take trades that were easier? So we're going to take a look at a few stocks here and just really drill this point home with visuals, because visuals are really important. So we know that we've been watching NIO and some of the other electric vehicle stocks. And we had a question last week about what does it mean to be well bid? And I discussed well bid, where it very cleanly means smart money is doing something. They're holding higher lows and they're creating higher highs. So you can see here in NIO, this is 1 week and this is a following week. 2 weeks of trading where it opened near the low, closed near the high, opened near the low, closed near the high, right? And the stock was what we call well bid, higher highs and higher lows. Easier 2 weeks of trading. Then you go here, to the last 3 weeks, and you're like, oh my gosh, I really want to trade the electric vehicle stocks right now. They've been sticking on fire. I made money on them in November and I made money on them in December. But you don't realize that the tape has changed. We had a week of selling and then a week of indecision and then another week of selling, but you continue to trade it. You continue to say, I made money in November and December. I don't understand. Maybe my system's broke. Maybe I'm not looking. These are the things you need to pay attention to. So you go into Roku. 1, 2, 3, 4, 5, 6 easy weeks of trading. Did you pay attention and recognize that there was 6 easy weeks of trading? We can get into the solar stocks, which were on fire for a while. If you look here at JKS, 1, 2, 3, 4, 5 easy weeks of trading, and then the tape has changed. I haven't placed a trade in this stock, I think, since here. When I finally took a look and said, okay, this is not a pause, the tape has changed. These are the things you need to recognize. Sometimes it's not your strategy. Sometimes it's you not paying attention to whether or not it's a good idea. So avoid any trade that does not fit your A+ scenario. Remember, this is not the same as trading for the sake of trading. This is you have an edge and you're just not paying attention to it, which I always say by far the biggest mistake I made when I first started trading was I didn't pay attention. And this is exactly what I'm talking about. Next and third problem, losing trades bother you. A losing day makes you feel like something is wrong. Now think about this. You have a losing trade, and you're like, and you get really upset. You get really frustrated. A losing day, you end the day. Oh, what's going on? Something's wrong. I need to fix my strategy. I need to go back and tweak stuff. That's not what you need to do. What you need to do is recognize that you are trading for the month. You're not trading for the hour. You're not trading for the day. You're not paying your bills with the trade you made one trade ago. You're not paying the bills with the trades that you made today. You're looking for the end of the month to be net profitable. Now, here's the solution to if losing trades bother you. All right, we have to flip the script, okay? It means that you're not making enough on your winning trades. So I'm gonna go back to the chart here again, just for a second. We had 5 weeks of super obvious price action in JKS here. And there's times when you might end the day saying, Pete, I just had a really good day. I made $1,000. JKS fit all of our criteria. It was perfect. It was the most amazing trading day possible. Now you get some context from me and you say, well, today was a day you probably should have made 3,000. JKS met all of our criteria and we never saw an opportunity or the need to get out of a good winning position. Today was one of those days where you should have been buying early and holding to the close because there was no reason to get out. So when you bought that little blip and you were happy that you made that $1,000 and you celebrated it and it was the most you ever made in one day, that's good. But something that a lot of people, especially new traders who just started trading in March, when you traded from home and you have no context, sometimes making $1,000 is a bad day when 3,000 was on the table. Sometimes losing $100 is a really good day if it was a super tough day of trading and you recognized it and pulled back your share size and you only lost $100. So again, we get angry and we get frustrated about the losing trades, but the losing trades really aren't the problem. It's getting to the other side and recognizing the market conditions. Is the market obvious? Is there an industry group obvious? Is my stock trading higher volume than it normally does? Is it taking out new levels? Recognizing those things in real time, including the market internals. What are the ticks doing? What is the VIX doing? Putting all of that together, building the argument, saying, my gosh, I have no reason to get out of this trade right now. I'm not going to settle for $1,000. There's more on the table right now, and I'm going to go and get it. When you get to that stage of trading, which is really the core focus of everything we do in the boot camp, that's when you're in charge of how much money you make, and that's a really special place to be. If you have more questions about this, definitely leave a comment below the video. Give us a thumbs up if you thought it was helpful, and please subscribe to the channel. That would mean the world to me. Have a great day, everyone.